Hey guys, what's up? It's Ace coming to you May 11th at 5:53 p.m. Pacific Standard Time here in California. I hope everybody's doing great out there. First of all, guys, I got to apologize. I know in my last video I said I was going to be a lot more active in posting content to help you with your trading journey, help educate you. I have been so busy with my family and with my job and of course with trading, and I just have so much good content to share, and I just haven't been able to find the time to make the videos. So I do apologize, but in order to make up for that, because I really appreciate the fact you guys watch my content and you follow me, I am bringing to you something that I think might be a game changer for some of you traders. Whether you're newer, whether you're more experienced, maybe you know of this, maybe you don't, but I'm really hoping that this enlightens and helps some fellow traders out there to trade better and to make money. And that's what this whole journey is all about. Okay. So what we're going to discuss today is one of the core components of my own trading system. This is what I use in my trading system, and I've made a lot of money using this particular indicator. And it's more of a system than an indicator, but I'll call it an indicator, okay? And what am I talking about? And let me just swing this in here, and I apologize, I'm not good with PowerPoint, so I'm going to use Word. It's called the Elder Impulse System, okay? And if you know of this, don't click the video off, because I'm going to go ahead and I'm going to be doing something here as I go along in this video that might show you a different way to use the Elder Impulse System. If you don't know what the Elder Impulse System is, you're going to really enjoy this, okay? What is it? It is a system that was designed by Alexander Elder. It was featured in his book, Come Into My Trading Room, which, by the way, guys, I've been a professional trader now for 11 years. I've been trading. This book I've read 3 times, and it was a major game change in how I trade. It changed so many things for me. It is one of the best trading books out there. There's many, many good ones. This is one of the good ones that you definitely want to read, especially if you're a newer trader. You can grab it and get it on Amazon. You can get everything on Amazon, obviously. But here's what it looks like. They have some used copies right here for $6.41. I don't know if that's for the hardcover book, but if you can get a hardcover book of this for $6.41, you're crushing it, because this book, I promise you, you'll read it more than once, and you'll probably make notes in it. And it's just really, I cannot say how many good things about this book. I mean, you could see right here, just from the ratings, 4.6 out of 5 stars. I see a lot of trading books that don't even have 3 stars. I mean, so you know there's 356 people at least have read this book and said it's amazing. I'm telling you, it's amazing. Definitely check it out. For $7, you can't lose no matter what. So, and this gentleman who wrote that book is the same guy who created the system we're going to talk about. So, according to Elder, the system identifies inflection points where a trend speeds up or speeds down. Now, as traders, we want to be in the market when it's doing one of two things. Either it's going up or it's going down, okay? And generally, we want to be out of the market when it's doing this stuff, okay? This is no good for our money and our portfolio. If we're going to trade directionally, we don't want to be in here. We want in this. We want to be in this. We want to be in price movement like that, okay? So the impulse system is based on 2 indicators. It's based on a 13-day exponential moving average, which identifies the trend, and the MACD histogram, which measures the momentum. Now, real quick, guys, if you do not know what the MACD is, if you've never heard of it, or if you don't know too much about it, pause this video and go into my channel and watch my MACD video. I spent a lot of time putting that video together. I teach people how to use it. I teach people how I use it to make money. I have gotten a lot of great feedback on it. And if you don't know the MACD, by all means, please pause this video. Go look at my other video on the MACD. It'll help give you the knowledge you're going to need to truly understand the system as we discuss it, okay? Strengths of the system: it combines trend following and momentum to identify tradable impulses, which is exactly what we're looking for, those times when the market's moving up or moving down, okay? So, without further ado, let's go ahead and take a look at the charts. I am in Thinkorswim, which is my charting platform. And the first thing we're going to do is we're going to talk about the rules, because of course there's always rules, and this system's no different. So first and foremost, this is a trend following system. So you always want to be trading with the trend. Now, Elder believes in using something called multiple time frame analysis. When analyzing the markets, he believes the trader should be looking at least two time frames, a longer term time frame and an intermediate time frame. Now, if you're an intraday trader and you're going to trade within market hours, depending on your hold time, you're going to want to be trading with the trend on a daily, a 4-hour, a 2-hour, and or a 1-hour chart. If you're a swing or position trader, you're going to want to be trading with the trend on the monthly, the weekly, and or the daily charts. Now, Elder recommends setting your trading time frames and calling it the main one you're going to trade, which let's say we're going to trade off the daily chart, we're going to swing trade. We're going to call this our intermediate time frame. Okay, so this is our intermediate time frame. Now, the longer term time frame is going to be the next one up. So this would be our weekly time frame. And the reason why Elder says you need two time frames is because your longer term time frame is going to identify the trend. So you see here, it shows us that the market's going up real clear and easy, and it shows us the market's going down real clear and easy, and it shows us when the market's in some level of consolidation, pretty clear and easy, okay? And that's why we're using the weekly as as an example. We're using the weekly as a long-term time frame, and then if we were going to use the daily as our intermediate term time frame. So if we're trading off the daily, we're using the weekly. And then we'll go ahead and get into a few more examples on other time frames of how we can use this. So let's put the Elder impulse system onto our charts, and let's take a look and see what that looks like. Real quick, take a notice of what the bars look like before I do anything. Just take a look at the bars on the screen. And now let's throw on the Elder impulse system. And you guys are going to notice a definitive change. What happened? Well, first of all, our bars went from being red and green to red, yellow, and green. So that's a major change. And also the red's a little bit brighter, the green's a little bit brighter, the yellow's definitely brighter. It's drawing our attention to these candle colors, okay? And this is exactly where the indicator becomes very unique. It's unique in the way that it color codes the candles based on trend and momentum for easy reference while you're looking at the charts. Now, the green candles, they show the bulls are in control of both the trend and momentum as both the 13-day EMA and the MACD histogram are rising, okay? So if we go in here and we take a look at these candles, we're going to see right here, the candles went from yellow to red to then green after earnings. They gapped up, they popped up, and then they kept running up, and the candles have turned green. Why? Because the bulls are in control. That's what this is showing you. Green candles, bulls are in control, 13-day EMA is rising, the trend is rising, MACD histogram is rising, momentum is rising, the candles turn green to go ahead and signal to you, hey, check this out, you might want to be in this trade, okay? Red candles, just the opposite of the green candles. So if we go, where's the red? Here we go. So if we go here, and we see we had green candles coming up, we had a doji, gap down, we got this kind of bear gap trap where it gapped down and then came back up, then we popped up into another doji, and then look at this gap down, and immediately candle turned red, and then we just kept falling, okay? But what is the red candle showing you? It's showing you the bears have taken control of both trend and momentum because the 13-day EMA and the MACD histogram are both falling, which will create these red candles to show you, hey, trend and momentum are down, are bearish on these particular candles. You might want to be interested in taking a look at what's going on here. So what do the yellow candles signify? Well, the yellow candles signify mixed technicals. So basically, they're not in alignment. The trend and the momentum is not in alignment. It's not bullish and it's not bearish. And what you notice when you get yellow candles quite a bit is you see consolidation here, okay? So like right here, you see how literally we got consolidation here. And that's showing you don't want to be in that trade, okay? Let's see if we can see another consolidation point with yellow candles. How about right in here? Look at this. Another example of consolidation with yellow candles, okay? So literally, it's showing you this is probably not the place on the chart where you might want to get bullish or bearish. It's not looking good. So once again, the Elder impulse system is showing you the impulses in the market, and it's keeping you out of trouble, okay? So when do we trade this? Well, once you have your time frame set up, you're then going to want to go ahead and interpret the signals. So for this example, we're going to use the system as if we were swing traders. Our longer term time, our intermediate time frame is going to go ahead and be the 1 hour chart. So we're going to swing trade, and when I say swing trade, let's say we're looking for opportunities that are going to last us just a couple of days, okay? And then our longer term time frame is going to be the daily chart, okay, for this example. Now, there are many ways to determine the longer term time frame from one chart. So if you don't have two monitors, you only have one monitor, how do you see what the longer term time frame is doing just by looking at this hourly chart? Okay, well, there's many ways to do that. However, though, Elder suggests to add a 65-day EMA onto your chart, which is 5 times the 13-day EMA, which determines the trend portion of this trading system. So let's go ahead and put those let's go ahead and put that EMA on our chart here real quick, and let's see what that looks like. Okay, so that's the 65-day EMA. Now, what Elder is saying is that the long-term trend is considered bullish when the market is above this 65-day EMA and bearish when the market's below the 65-day EMA. Well, look at this. Market's below the 65-day EMA, and look at this. Man, it really went down. And there's some really good trades that could have been taken in here, you know. And I'm sure we can find another example of maybe when a market was popping. I'm trying to think what was going up today. I think FDX has had some good days lately. Yeah, here we go. Here's a great example. Here's FDX. Notice how when it's above the 65, it's very bullish. So this 65-day EMA, the 65-period EMA, I say it's not day, excuse me, we're on a 1 hour chart. This 65-period EMA is showing us that, hey, price is above the EMA, we're bullish on the longer term time frame, which would be the daily. And when it's below it, we're bearish on the longer term time frame, which would be the daily. So that's the power of the 65 EMA. So how do we trade this? Well, a buy signal occurs when the longer term trend is deemed bullish and the Elder impulse system turns bullish on the intermediate trend. So the longer term trend is up here, and we have all these green bars. So what Elder's saying is that you can look to go ahead and execute trades when you see something like this, where you see you're in yellow bars here. So this is your caution, do not enter, do not enter, do not enter. And then here we go. On April 29th at market open, we had a gap up. The Elder bars turned green. We're above the 65. Elder's saying, okay, this is, you might look to be able to take a trade here. And let's just hypothetically say we got in somewhere in this first hour. Let's say we got in right about, let's say, halfway of the candle. And that was at 290.71. And let's say we just held this until the end of the day and we closed out, let's say, in the last hour somewhere up here. Well, we went from 291 to 295 intraday. And did we get a yellow candle? Absolutely. Does a yellow candle mean immediately close out the position? Well, you know, no, I don't think so. I mean, there's many ways you can determine when to close out your position. You can go ahead and you can use a take profit area. You could use a take profit percentage. You could use support and resistance. So maybe you were getting up here against this daily resistance level and it popped above it. And then, you know, this yellow candle definitely printed down. It broke below this candle's low. A lot of people might have exited here. And there's nothing wrong with that, you know. So let's say you exited right where my cursor's at. What are we at? 292? And let's say you got in halfway at this candle. And I'm just saying halfway because, you know, maybe you're being conservative. You don't want to jump right in at the opening. And so you got let's say for $290.50. So within a matter of, you know, 2.5 hours, you were able to go ahead and make yourself about $1.50 per share profit. Okay, and if you're trading options, $1.50 move on a front weekly contract will net you some nice money. Okay, but that's just showing you a little bit of, you know, how the Elder impulse system is working here. Okay, we want to make sure always that the longer term chart is showing a clear uptrend. So if you are using the 65, you want to make sure, notice how the 65 is sloping. So on this day I was talking about this hypothetical trade, we're sloped upwards, which is showing that the daily chart is bullish. And if we went to the daily chart on April 29th, let's just see what that looked like on April 29th. April 29th. Here's April 29th's candle, guys. Look at that. Look at that. That is a nice big bull candle, and it's green, which means that the elder impulse is telling us on the daily chart it's above the 13-day EMA, and it's the MACD histogram's pushing up, which means there's a momentum. And look at the 65 EMA, which once again signifies what the longer time frame's doing. This is sloped very up. This is very much sloped up. Okay, pretty cool, huh? So it is showing you really where the momentum and the trend is strong in the market at the given time. So keep in mind any buy signals that happen when you're beneath the EMA, you're going to ignore those. And any buy signals, any bullish green candles, ignore them. Just like when you're above the 65-day EMA, any bearish candles like these right here, yeah, you might have been able to make some money if you were trading intraday on this long red candle, but too risky. I mean, momentum's up, the trend's up. You're fighting against the trend. You're fighting against having the market wind at your back, and that's a recipe for losing. So the opposite side holds true. Like I said, down here, you're under the 65. You're going to want to take trades or consider taking trades based on red candles. Here you had this like little support area, and you could like put in right there, just put in that line, and then a break of that line the next day. Look at these red candles pushing down. We're underneath the 65. There's a good trade right there. You guys could have taken off, and made some money. Let's say you got in halfway on this candle, 281.70. Let's say it came down, reversed back up. You saw this doji. Let's say you got out at the close of this doji. You'd still get out at 279. If you got in halfway on this candle, you got in at 281. So, I mean, you're talking another, what, $2? $2 a share. And once again, if you're trading front weekly options contracts, a $2 move is going to net you quite a nice bit of profit. Okay. So that is pretty much how the system works. I will take this one step further. Let's say you want to trade intraday. Okay. You can use the 1 hour as your longer term time frame. And when I say trade intraday, maybe you want to just scalp, or you want to trade and be in a trade for an hour or less. You could use the 1 hour time frame as your longer term. You can use the 15 as your intermediate, okay? And then you can use the 5 minute as your execution chart. Okay? So look at this. I mean, intraday, 5 minute. The minute it falls below the 65 day, we know we're now bearish on the 15-minute chart, and we could always go back and we could take a look at the longer time frame, at the hour chart. Well, look at this day. This day is nasty, especially right here in the beginning. Let's look at an hour chart. Oh yeah. Now, granted, you had a pop up here, but I mean, these are all red bars, and technically this thing gapped. It did gap down, and it was playing right around the 65. So in this example, it could be a little bit risky, because you're kind of hanging out on that 65. But I think you guys get the idea, is that, you can go ahead and use a 3 time frame analysis. You can have a longer term trend time frame. So let's just even take this up a little bit. Let's say we're looking to swing trade. Weekly can go ahead and be your longer term chart for your trend. The daily can be your evaluation chart, okay? And then you can go down to, let's say, a 2 hour for execution. So right here, we gapped up and we went into yellow bar mode, and then we went into yellow bars. But let's say right here, we decided, you know what? I want to get bullish to swing trade this. Well, what is this, April 29th? Let's back this out to a daily. April 29th. Where are we at here? April 29th. Here we go. Well, that looks really good. And we just broke above this major resistance level. We broke above it. I would probably get bullish here. Okay, we pulled back, no problem. But then look at this run. And even with the pullback, Elder was showing you, hey, this candle's pulling back, but it stayed green, which means the Elder Impulse System is telling you, even though this is a pullback candle, you still have the trend and the momentum behind you. So maybe, do you want to exit? Well, that's up to you. Obviously, you have to put in your stop losses or your areas of where, you want to take your stops. But me personally, I wouldn't have gotten out. If I would have gotten in on this bar and it broke over the resistance area here. Yes, it did gap down, and yes, it did go ahead and look like it was printing, to the downside and closed down. It never actually broke this candle's low. It got down here with the wick, but it never broke the low. So to me, I'm still in this trade. I'm still in this trade. My stop would probably be, whoops. I'm just going to clear this real quick. My stop would probably be somewhere maybe under here. Because this gap up right here, I'd probably put my stop either at this wick or maybe at this wick here. So I would be in this trade. I would have taken some nice profits there. So, just to conclude, guys, because I know the video is getting a little long. We're at 20 minutes. This system is designed to catch relatively short price moves. Okay, you can see these price moves. They happen quickly. They're very quick. Here, just to show you, here's a down move. That's quick. Here's an up move. That's quick. Anywhere where you see these candles paint, the moves are pretty quick. Here's a down move. Obviously you don't want to take any up moves when you're under the 65. Here's another quick down move. And then when you get back over the 65, here's another quick pop right here. These areas where these candles go red and green, as long as you're using a filtering system of some kind to make sure you're on the right side of the overall trend of the market, you're looking good. Here's another quick pop-up, 2-day pop-up with some green candles. So this system definitely can keep you out of trouble. I do like what Elder says in his book. He says the impulse system encourages you to enter cautiously but exit fast. He says this is the professional's approach to trading, the total opposite of the amateur style. Beginners jump into trades without thinking too much and taking forever to get out, hoping and waiting for the market to turn their way. Nothing can be truer. Nothing can be truer. Okay, so what I want to do now is I want to kind of build this trading system I told you about here before this video gets crazy long, although we might be already too late for that. So let's go ahead and add in the 13 exponential moving average, which is important, and I want to show you guys a little something on that here in a moment. And let's add in the MACD, and let's add in the DMI, and let's add in some Bollinger Bands. And what we have here is a nice little system now. Really, it is. And let's take a closer look at this. So how is all this playing in? Well, first and foremost, I would like to show you guys a little bit about how then these colors, the bars are turning different colors and why. This is right here, the 13 EMA, this white line, okay? So when price is above the 13 EMA, and you see how the MACD histogram is painting the cyan color, which these are bullish. This is bullish momentum turning the MACD histogram to light blue. You actually have a MACD histogram, a MACD cross right here. You have the MACD line cross of the signal line here. The histogram is positive, and you have the price over the 13 EMA. This is why these bars are printing green. Even this bar that retraced a little bit still printed green because these parameters are met. Trend was met and momentum was met. So the bar stays green. Now the bar went yellow. What happened? We're still over the 13 EMA. We are, but look at the MACD histogram. The MACD histogram turned purple. And purple means that momentum is starting to wane. And as long as momentum is waning, these bars go yellow because it's warning you, hey, momentum is running out of steam here. You may want to get out of this trade. You may want to exit, take your profits, or not enter if you're not already in, okay? And so as you see, we're waiting for another green bar to come. This green bar printed, but if you were to go ahead and have the MACD on your chart, which is why I put this on our chart, then you're going to notice, yeah, it printed green, but it printed a green candle, but look, this one lone positive momentum bar is in a sea of negative momentum bars. So would you really want to get long here? I'd probably want to see a little bit more follow through. So no, because look at that, the very next day it goes back to yellow. We get this candle retraces, doesn't break though the low of the previous candle. So for me, I would still be looking for a possible entry in, but I want to see a little bit more of a pullback, maybe to the 13. And then here we go. We get this pullback. It stays above the 13, starts to come back over. You see the MACD histogram went negative momentum, then it's starting to push up positive. And then right here, we get another green bar. Well, we're still above the 13 on trend, and we have the MACD pushing higher, which is showing positive momentum, and you see the bars turn green. Now, of course, we went into earnings here and we got a gap up, but I want you guys to get an idea of how the system is working. It's utilizing the MACD and it's utilizing the 13-day EMA to show you trend and show you momentum. Oops, I put MACD. I meant to put Amazon. There we go. So actually, no, I don't want Amazon. Let's see here. What about MU? Let's take a look at MU real quick. So here's a good example of really some good momentum utilizing the system. Here you'll see when we did go ahead and get some bearishness going, you're going to see we had a crossover here. And I just really, once again, showing you the candles. The candles turn red when it gets under the 13 and you get negative momentum on the MACD. They turn green when you're above the 13 and you're positive momentum on the MACD. Okay. Now this other indicator here is the DMI. I just used this. I wanted to put this in the system and use it as a way of confirming who has control, bulls or bears. When the green line is above the red line, the bulls are in control. When the red line is above the green line, the bears are in control. You have this white squiggly line, which is called the ADX. The ADX is basically an indicator that shows trend strength, okay? So what you're going to see here, as we were in this very bullish trend going up, okay? What are you noticing about this ADX here? The ADX is actually going up. So it's showing you that this trend has a lot of strength in it, okay? And even when you got a little bit of consolidation here in the ADX, which is the white line, started to go down, immediately, as soon as the price went ahead and started taking off again, the ADX was rising, showing you that this trend is very strong. So when you get these pullbacks are opportunities to take the next leg up, okay? And that's exactly what this ADX is showing you. The green and red line's really easy. When the green is above the red, once again, bulls are in control. When the red is above the green, bears are in control. It's a nice little confirmation indicator to show you the trend and to make sure that as you're looking at MACD and you're seeing, bullish momentum firing here, bullish momentum firing here, you're seeing bearish. Now here's bearish momentum firing. If you were just looking at the MACD, would this be the right place you'd want to get in? Well, no. The DMI is telling you, hey, wait a minute, green line's above the red line. Bulls are still in control. Ignore this. Ignore that MACD pullback. No good. Not to mention, you're above the 65. Remember that 65 line we talked about? So you wouldn't be taking a pullback or any kind of a negative trade anyway. So it's, once again, all this is just to keep you guys, on the right side of the market, okay? Let's see, what else can I tell you as we are getting pretty long here? I think that's about it, guys. I'm going to go ahead and throw in here two other things I'm going to put on this chart, and these will help out quite a bit. One is called the ADX chart label, and then the other one is called the volume trend chart label. And I like these quite a bit, and you're going to notice when we apply them, they put these labels up here, okay? And ADX is that white line, guys, okay? So this ADX, when it gets above 20, so right here, it's at 52.5, and you can see that right there as it's showing it on the indicator itself. But when this ADX level, this white line gets above 20, as you can see right here, it was below 20, it was at 18, just when this trend started. And then as you see, it pushed up over 20 and it just kept building and going and going and going. And you'll see how the numbers get higher and higher and higher. And that just shows you this trend is massively strong. Tons of bulls, tons of buying pressure. And this chart label will just show you where this white line is at without you having to go ahead and trying to come down here with your cursor and seeing where the number's at. It'll show you right up here. And when it gets over 20, it'll turn green. And it'll let you know that you're in a very bullish trend. The other indicator, or excuse me, the other chart label is the volume trend chart label. I don't have volume on my charts quite a bit when I trade. I have them on some of my charts, but a lot of them I don't. I do believe in using volume. I think it's very important, especially when I'm trading intraday. I look at volume quite a bit, and even on some of my swing trades I do. But I like this chart label because it'll tell me when there's strong buying volume coming in, strong selling volume coming in, and it'll show me when the price is strong or weak. And so these for chart labels will color code as price gets stronger, or as you can see here, price is weak, obviously, so it's color coding. And when there is strong selling volume or buying volume, even intraday, these chart labels will go ahead and code to a different color, excuse me, to their specific color, showing you those strengths or weaknesses. So that's the video, guys. I hope it's helpful and useful. If you would like me to send you a link to this, let me know. I need to actually create the link, and you know what I'll actually do? I'll just put it in the comments down below, or not the comments, I'll put it in the description down below. So you guys can take this and you can put this into Thinkorswim if you have Thinkorswim, and you can make it your own. You can tweak it, add to it, take away from it. But this should be a pretty good trading system as long as you follow those rules with Elder. Once again, guys, thanks for watching. Be sure to subscribe to my channel. I got a lot more good content coming out. Make sure to get Elder's book too. I think it'll be a game changer in your trading journey. And make sure to click that bell icon so the next time I create a video, you guys can go ahead and check out the content. I wish you guys all the best of luck in your trading journey, and we'll talk soon. Take care.